Hey folks, welcome to the market internal review for September 22nd, 2023. So we're going to start the review out here with SPY. So SPY started out with a dollar gap up, and we started with somewhat of an extreme bull tick here around not quite 800. Price and volume for the New York Stock Exchange both green to start the day with their trends, albeit probably catching up to current candle data. We're showing an upside trend here. Notice though that after we had what was an immense kind of sell-off day Thursday, we do have tick closures on the average rising, but we have trend balance here. So as is typical sometimes with trend balance, we still can have a trend direction as far as bull or bear, but because we're in a balanced price market, we'll find that we have kind of a channeling action here. And that's exactly what we see. Is we see an upward channel, and we're doing a lot of zigzag right in between here. So it makes it somewhat frustrating to believe in a particular direction, and it's definitely frustrating for anybody trying to do a little bit of an intraday swing here. Where things get kind of interesting is the previous TiWAP on Thursday's session, and we see this large engulf push here, but no real bull tick to back that up. Immediately given back, and it's right around previous TiWAP as well as mid of previous range, and we do bring that back up a handful of times, but we really start to reject it here, and definitely here we have that engulf reversal signal. A couple things that happened is we had a tick divergence here between price making a lower high and tick making a higher high. We're starting to see some breakdown on the ad and the price and the volume of the New York Stock Exchange. Mercy is also showing us that we're starting to break down from where we started during the day of sustaining that upside. We do have a strong bounce at TiWAP, come back, we reject previous TiWAP one final time from Thursday's price data, and then that's where we have that, as far as I'm concerned, that coveted entry, the break and retest reversal setup for standard deviation on the first standard deviation. And given that we had price exploration up to the third deviation high, we can't expect to potentially find that same price as we revert. And we do see that we don't quite reach current third deviation, but we do reach it from Thursday's price data, and certainly from the time of entry, which would have brought us to about here. So we hit that by a little past 130. So that was a fantastic catch. About a $2 move. If you caught it all the way to this price target, I believe it was a little less than $3 move. We have a good trend flip here, right post this breakdown, break and retest entry of the lower standard deviation. Gets you 1 and 2 different price target take profits here. So the way I would enter it, so even that alone was about $1.30 there, a 2-to-1 trade. We're definitely chopping around the daily gap midpoint here on a handful of occasions. We get a really awesome squeeze signal here based on the Mercy study, and we get that crossover that we look for. It is somewhat of a choppy delivery. We do finally have a complete retracement of the first standard deviation. We wick on it here, right there. And then we have that rejection. We could not retrace back into previous day's first standard deviation, and trend balance is back. We see that extreme bull tick closure right here on that price line, and then we get a flip on price right about here after it dims, showing that the New York Stock Exchange advancement is weakening. Tick closures crossing down zero here, lots of bear signals. And then we get all this extreme bear print here on tick. Mercy's flipped over early, and then we get all those bear squeezes down here. Interesting to note, we did break down previous day low a handful of times, and we did eventually close below that at the end of the day. This line here was something else I had noticed, was yet again another higher high on tick to the upside, and a lower high on SPY. So yet again, another divergence that resulted in quite the epic short setup. A couple things to note: VIX did spend most of the time not able to break out and make a new high, even with that immense sell that we saw at the end of the day on SPY, but it is up. Thursday, after all that selling, we ended somewhere around 17.5, and we're basically still stuck there. Here's a little bit of the ad review, just kind of looking at that price channeling that we had. You can definitely see that here on the ad chart. Definitely, though, post 11 o'clock, we start seeing all that accumulation towards the downside. We do see a reaction near zero with that rip, and then a final rejection, and we cross below zero. So technically, the New York Stock Exchange did flip towards bearishness right at the end of the day. As far as tick, so tick showing us essentially exactly what we saw on MIT, but we do see that the accumulation at 130 is where we got that flip, and we really started to see it dip way down here towards the end of the day. Even through that rip, we couldn't bring it back over zero, and definitely finished the day well below. Volume had a similar story to ad. I do believe the channel, the bull channel, was sustained a little cleaner on the volume, and then we stayed flat mostly through lunch before we reached down towards zero, have that rip where we actually made a new high. If you notice, it's kind of interesting. And then we have that full breakdown. Those last extended trading hours bars did take us down towards that extreme sell zone, or the strong bear zone that I like to see if I'm going to be really looking for strong shorting. That's where I'd want to see it, but much earlier. You can see Thursday. Thursday was nuts. We got down there really fast, and then we went way down. So that was an extreme sell-off day. I mean, you can see it even in accumulation. Immense. Running through the multi-time frame analysis here with the monthly TiWAP. So Wednesday, we had a first standard deviation range size of a little less than $6. And by Friday's close, we almost hit 13. So we've done an immense amount of work with all this selling and gaps to really expand this. I do think with the reclaim of second deviation low that we might see a little bit of a pop. We're also essentially at the low point of monthly TiWAP price targets. So these all came from August price data. I would have to go back even further, maybe to July, to see if I can't find something lower than these. That being said, I do think with the amount of sustained selling on the interest rate news from the Fed, I mean, I could see more downside being in store. I just won't have any price lines to use for my projections. I may start having to use these third deviation lines. I don't know. Hopefully not. I mean, that's 420 something, but I have a reason why that might be in store for us. Same thing on Qs, about a little over $6 here on first standard deviation for the Qs. Actually, a little less than 7, I guess. And we really expanded it by almost twice as much here at 13.2. And same story. We did reclaim second deviation, but we're still dragging everything down. There is a little bit more range available for the monthly August TiWAP price target lines on the Qs, but still not a whole lot left. Dow definitely did not have the same kind of gap that we saw on SPY and Q, only 11 cents. Still applicable. You can see it provided many bounces during the first half of the day, basically fully broke down towards the latter half. Certainly closed well below previous day's low. And the Russ, kind of this similar story, expanding the ranges, did reclaim second deviation low on the monthly TiWAP, but spent all of its day effectively rejecting TiWAP and finally closing previous day low. Now I'm going to jump back to Qs real quick because Qs is rather interesting to me. So Qs spent, albeit the very last couple hours of Thursday selling off, they spent the majority of it consolidating. And then Friday, I found it interesting that they actually try to test previous day high. So I don't know that I would make a call to say that it's stronger than the other indices. I think it's somewhat just more volatile. So it's really running when it runs, and it's really dumping when it dumps. But that being said, there is a value play to be made here, in that modern civilization is using products of all these different tech companies. So I think there's some AI hype still priced in. There's a lot of things that are still priced in here, and these companies have an immense amount of employment. Even with the layoffs that big tech had, there's still a lot of modern day civilization that's relying on the products of these companies. So it's kind of difficult, but I do think it's a little stronger in that we did try to break out previous day high, and we also did stay above previous day low, albeit just. But that's a little bit of a stronger outlook from me compared to the other indices. Now, sadly, with SPY, we did lose the 100 SMA on Thursday. We got below, actually, from Wednesday, well below. We maybe tried to test it. I mean, it's still pretty far away from that wick high there. And just back-to-back immense selling here from those past 2 days. I mean, from the high to the low, from Wednesday to Thursday, it was not quite $12.50. And then certainly almost 13 towards the end of Friday. And we lost the 100 SMA. We lost the weekly trend. And for anybody that's into moving averages, I don't, live or die by them, but the 10-day price average crossing below the 20-day, certainly backs up the fact that we'll probably continue to see more of a selling environment. The last time we saw that was August 9th, and when we did have that cross down, we fell another $13. I'm not sure that's what's in store for us or not, but it certainly could happen. We have a couple of bounce points here, the monthly trend line, as well as the 200, and just to current monthly trend line, that's about $6 to 200. That's not quite $12. So that definitely aligns with the scaling of what happened last time we had a 10-20 cross down. So the reasons why we might see somewhat of a little bit of a bounce is the fact that the growth above 20-day average is now sitting at just 17.5%. And you can see a lot of times where we had that before, we did have a little bit of a bounce. So let's see if I can pull that up here. So this one, it aligns with the weekly trend line, but we didn't even break below 25 at that point, and we saw a nice retracement. And then a couple times here, it did take a little bit. We consolidated for about a week, but we did finally see a little bit of a breakout back towards that area where we really lost structure and started making lower lows on the daily. What is interesting is that we could not break past about 65% of stocks, having a nice 20-day trend. The last test was at this gap up that we had on September 14th. We could not break out of 60% of stocks. We had that rejection, and then we've been selling ever since. So my fun little projections that I see is, either we gap up a little bit and maybe try to test 100 SMA or test a higher high here, something of that kind of outlook, or, we gap, we don't gap, we just open up roughly where we closed, and then we kind of zigzag down, making lower lows until we finally test the monthly trend and we test the 200 SMA before, fingers crossed, hopefully we start to retrace back up. If we lose the 200 day, that would be pretty rough at that point. But per seasonality, September definitely sticks out as kind of a rougher month, then followed up by October, November, December, we start to see a little bit more green. I do think that a handful of the reasons why that is the quarterly breakdowns of all the different companies reporting their earnings. We also have the holidays, so I think consumer staples and cyclicals, discretionary, all that kind of has an uptick. Now this year though, given the economic outlook with inflation and recession, I'm not sure if we'll see that this time around. I would have to go and look at some of those spider sectors back in previous times of recession and economic despair, and see just kind of what pops some of those stocks had. So they often say that the history doesn't repeat, but it rhymes. Or something to that effect. Maybe I just butchered that, but the idea is that it'll look similar but slightly different. So I think this time probably be much of the same. But I'm watching these growth stocks here. It's been a pretty good signal for at least some kind of relief bounce. The last couple of times here we had quote unquote relief bounces, but it didn't amount to much until this last one that we had from August 24th, and then we really did a run. Which was fun while it lasted. Let's see, that took us from the weekly trend up to those highs. So it was about a $16 move there to that price line I had from quite a while ago. That's gonna pretty much wrap it up, folks. Starting next week, I'm just gonna play it as I usually do, day by day. And I'm not going to really come in expecting a whole lot other than maybe trend balance and just kind of more nasty price range movement like this. But one thing I will say is that with VIX almost tapping 18, we might start to see some violence in the markets again. So if you're a scalp trader or somebody that likes to use volatility in your trading, that could excite you. So just be careful out there. Hope you had a great week. Hope you had a great weekend. And as always, thanks for watching. Happy trading.